I'm Shane Fleming and welcome to my channel. I get asked this question all the time from young 20-year-olds and 30-year-olds. I love their motivation and their hunger to get involved in real estate investing at such an early age. However, if they rush into it without asking these important questions, they could make some serious mistakes. That question is, should I buy an investment property before I buy a home for myself? I can't answer that question for everyone because everyone will have a different circumstances. However, I think it is important that you realize it could cost you down the line if you buy an investment property before you buy a family home. And I think there are some important questions you should ask yourself before you rush into buying an investment property if it's the first property you actually buy, because it could cause consequences for you, your future partner down the line. Let me know in the comments below if you are thinking about buying an investment property before you buy a home for yourself. Put your reasons below in the comments. I do admire the 20-somethings, 30-somethings who are looking to buy an investment property before they buy a family home. I admire their hunger to get involved in real estate investing at such an early age. However, depending on location and also depending on the tax setup for first-time buyers, it could be a costly mistake down the line. In Ireland, first-time buyers benefit from the 10% deposit rule. They also can benefit from the Help to Buy scheme if they're buying a new home. If you're buying an investment property, generally you are going to be required to give a 30% deposit, not a 10% deposit. I know there are some people who will approach the bank as first-time buyers and buy a property and rent it out and never inform the bank. This technically is mortgage fraud, so I'm not suggesting this as a strategy. I know some people out there do this, but it is mortgage fraud, so therefore it's not a strategy that I can endorse or suggest people do. An important consideration as well, perhaps you're single right now, you buy an investment property, down the line you meet a partner and you decide to buy a family home. You will no longer be classed as first-time buyers and you will be required to pay a 20% deposit. Perhaps your partner won't thank you for that at the time either. So it's just a consideration to think down the line as well. Generally speaking, traditional lenders will not lend to people who do not have a family home if their first purchase is an investment property as well. So that is something to consider as well. It's harder to get funding for investment properties unless you already own your own home. If you do buy an investment property as well with a group of people, it's important to realize that you could end up ruling yourself out as a first-time buyer because you have a share within a property as well. So it's important to understand that you can structure that correctly if you do buy within a group of people. It's not all doom and gloom. There are options out there for young investors to get involved in the real estate market. But before I go on, please show your support for the channel. Make sure you've subscribed if you haven't subscribed. Like this video, it gives me more motivation to keep creating more videos as I go on. So please continue to like the video and subscribe to the channel. So what are the options for first-time investors? Well, one option is buying through a company. You could set up a company to buy the property through the company rather than your own personal name. What I would suggest in this case is you also get a shareholder involved that owns a property, because that will help with the lender requirements as well, because there will be some shareholder that has a family home involved as well. This will help with you getting funding. I would also suggest that you speak to your accountant, because you want to make sure that you've set up the company or you've set up the acquisition, that you're not ruling yourself out as a first-time buyer down the line as well. So you have to make sure it's set up correctly, that you're not ruling yourself out as a first-time buyer as well. Generally speaking, when you are buying through a company, you will require at least a 30% deposit. So that's important to remember, that you will require about 30% of a deposit when you're purchasing an investment property through a company, particularly if it is the first property that you're buying. However, I think there are better ways for young people to get a taste of property investment as well as property management in a very tax efficient way, and that is house hacking. House hacking is when you buy a property you plan to live in that's bigger than your current requirements, so you can rent out a number of bedrooms. Also, you need to buy in a location that has high rental demand as well. This strategy has a huge amount of benefits for young people. One, you can still classify as a first-time buyer and avail of the 10% deposit requirement and Help to Buy scheme if you're buying a new property. But one of the major benefits of it is it's very tax efficient because of the rent a room relief scheme, which allows you claim rent up to $14,000 per year tax free. Therefore, that's a huge benefit for you in terms of tax free income that you can generate from your property and pay down your mortgage. Ideally, the strategy would be to live in the property for a number of years, renting out a few rooms and paying down as much equity as you possibly can. And then when you move on to your next property, you hold that property as a long-term investment, and you've paid enough equity down that the bank will allow you hold on to that property as an investment property. One note on the rent-a-room relief scheme: it has to be within the same property, so it has to have the same entrance within the property that you're actually renting the room out for, so therefore a duplex wouldn't count or a granny flat wouldn't count either. I do think this is a great opportunity for young people to get a taste of property investment and get on the property ladder at the same time, benefiting from the first time buyers deposit of 10%, also perhaps maybe even buying a new property and benefiting from the help to buy scheme, as well as availing of the rent a room relief. This makes it very tax efficient for a young person to go ahead and buy a property and get on the property ladder and pay down their mortgage as quickly as possible as well. It won't appeal to everyone, but definitely there are some people who will be able to take advantage of that current situation. Just want to say it's coming up to Christmas now. I want to say thanks for all the support this year and supporting the channel. If you haven't subscribed to the channel, please hit that subscribe button. Make sure to like this video. I will be coming out with my prediction video for 2022 in the next week or two, so make sure you subscribe and hit that ring notification bell so you don't miss that, because that will be out in the next week or two. If you want more information on house hacking, I did do a previous video. I will link it up here somewhere as well.